What's going on, everybody? So pretty much I want to go over this gold long that we did end up taking here for the signal room. So I'm gonna actually pull up the signal itself. So let me just kind of open up my Telegram here, as you could see, right? So with the signal room, as of right now, while this algorithm is going to be replaced, for those of you that did see the big notification, we do have an algorithm that has been worked on for the last 5 to 6 years. The algorithm has been made by a quantum physics engineer, so that's a pretty cool thing. We're going to be getting rid of this current algorithm, and as of right now, the algorithm has barely been taking any trades. Me and Daniel, we both were analyzing the market last night, and we decided to actually call gold longs. Now I'm going to break down the actual position itself. I know he did a breakdown and he wanted me to do a breakdown as well, and I would actually think it'd be pretty beneficial for everybody to see the breakdown. By the way, I'll go tag Daniel. His YouTube link will be in the description. But anyway, so we called gold long setup. So as you can see, previously the bot had taken a trade here and it ended up hitting stop loss for a 50 pip stop, I want to believe, right? But as you can see, that was made back already. So you could do 180 divided by 50 and you could see the amount that was made back. So typically if you risk 1% per position, you would have made back 2 or 3% roughly as of right now, or I believe 3.5%, something along those lines. But anyways, we do have multiple take profit levels, as you could see here, along with here's actual signals. You could see it was sent roughly around the London session, right? But anyways, let's kind of get into the breakdown itself here. So when it actually comes to analyzing any market, doesn't matter if it's indices or Forex, right? Or even cryptos or stocks, I'm always looking at the higher time frames, such as the daily and the weekly time frames. Then I work my way down. Why do we do this? We do this simply to look at the overall direction of the market. Clearly, price is in a bullish trend, so I'm going to look for mainly buying opportunities here, especially if I'm going to be holding a trade on a higher time frame, such as the 4-hour time frame, right? But anyways, now I do have 3 moving averages here, as you could see. One of my moving averages is used as an exit signal, which would be the 8 moving average. So as of right now, we're going to ignore that, right? So typically the blue is over the red, meaning that we're looking at more bullish volume overall in the market, right? It's as simple as that. Along with the actual level of structures as well, as you can see, prices forming lows and higher highs at this point in time. So we do have this bullish trending structure. Even if we start from down here, that would be a higher high, then we have a higher low. So we definitely can see that price is forming this type of bullish structure here so far. Now, of course, we're not going to get into the fundamentals of why this big move happened here. But overall, let's kind of look at the candlesticks, because if you're able to interpret and read these candlesticks as best as possible, then you're going to be a lot more it's just only going to benefit your trading a lot more in the future. Anyways, so now when it comes to trading and reading these candlesticks, one thing that I do like to pay attention to is the wicks. Clearly, there is a significant level here of resistance here on the daily time frame that price did end up rejecting. Now, when it comes to the daily, I typically, or the weekly in this case, right? Typically, I like to look at these overall even handle numbers, because these are the numbers typically that your bigger banks and institutions are going to trade. So let's just say price rejected 1455 right here. The next level we would see typically tested is this 1500 level, somewhere around this range here. So just really be very attentive to those levels. I would mark them off as key levels as well. So we are approaching that 1750 level, which is around this region here. As you can see, price did reject that. Price did find some form of selling pressure at that level. Now, along with that, right, notice these wicks here on the weekly time frame. If I can just get that out of the way, right? These wicks, we could clearly see that price is forming higher lows. Notice how the wicks aren't even going lower than the previous week's wicks, right? So that shows us that price is definitely forming higher lows on this weekly time frame, and that price could potentially also be forming higher highs here. Now, we're not just going to look at that, right? One thing that I also want to look at is that the previous week closed above the weeks before high. So this is the highest high, the highest point that price reached on this doji candle in that week. Price closed above that and actually made higher highs, along with price making higher lows for the following week, right? Now, one thing that I also want to point out as well is that price did close above this level right here, this 17 let's just leave it at 1730 right? That level of resistance, right? So let's kind of keep that marked off there in red. Price closed above it. So what can we expect? We can expect price on the following week to go down and look for a level of support, right? So let's actually go down to a daily time frame, and we could probably see this a little bit better, right? We could see more detail. Here we can see clearly when it comes to structure. Notice the actual lows of the wick, they're getting higher. That is telling us price is forming higher lows. And in this case, price rejected this level, right? And it comes again to your simple breaks and retest. This was at one point a level where sellers held, right? As you can see, they're selling resistance here. We have this double top and then price went down, right? That would be a basic retail pattern. Now, once price actually broke through this level of resistance here at 1680, price came back down, and this previous level of resistance held as a level of support. There was buying pressure in this area. And as you can see, this would have been definitely a nice trade opportunity for you here. As long as price held this level of support, that would have been a nice opportunity for you to actually go long, because it really wouldn't make too much sense for you to go long at resistance, right? You want to buy at levels of support, buy when price is low and sell when price is high. Now, typically in a situation like this where price is consolidating, I'm only going to be looking to buy at support. Why? Because the overall trend is bullish. The probability of price continuing to go up after a level of consolidation when price is turning bullish is a lot higher than price breaking support and continuing to go lower. Now, when it comes to the actual structure and why we took this trade, simple. There's a level of resistance here, right? Price broke above resistance. These two candlesticks is considered the break, right? Let's say we have a resistance here, right? Let's just kind of draw this out. Ignore how ugly this is going to look. I'm not Picasso, I'm simply a trader, right? Once price, let's kind of make another candlestick here, right? Once price gives us this candlestick formation, this is considered the break. This is considered the break of that level of resistance. So what can we potentially look for, right? This trading day, price clearly pulled back, gave us an opportunity to actually go long, and we can look at that at an even lower time frame, right? So all I'm going to be looking for is to see if this level of support can hold, right? If this level of previous resistance will now hold as a level of support, if this level where we had previous selling pressure will now hold, and want to see if buyers can step in at this level, right? Now keep in mind these moving averages here are also cross, indicating that we should be looking to go long. Now, let's get into the confirmation aspect of things. Why did we take the entry? Why did we actually go long where we did, right? So the entry technique was definitely an aggressive entry technique, right? So here, based off the 4 hour, one thing I'm going to do is run my Fibonacci retracement tool. And again, the tool is simply used as a form of looking where price may reverse and continue the trend. It's not some mystical magical tool like a lot of people like to think it is, right? So we can clearly see that the 20 is over the 50, meaning we're going to be looking to go long as well. So all the higher time frames, the 20 is being maintained over the 50. Price pulled back to this 50% and formed this level of support. How can we identify that price formed this level of support? Simple. We had a bullish reaction at that level, right? At this point in time, this would have been the most aggressive entry. This wouldn't have been an entry I would not have taken. I would have simply waited for a retest. So I'm going to look to see if this 50% can hold, because typically I like to go long at the 50 and 618. So we're going to get into how and why we place the stops the way we did, right? Keep in mind, this is that level of resistance here on the daily time frame, right? So I'm going to have that marked off in the daily. We have the level of support here, as you can see. Now, when it came to that, we had the first initial rejection here of the 50%. So when it comes to confirmations, we had a price pull back to the 50%. Is enough. It's a significant enough of a pullback to be considered a higher low. And think about it as, okay, we want price to give us a bigger discount before we look to go long, right? Simple as that. So price pulled back about 50% of this move over here. At that point, we're going to start to look to go long, right? All I was looking for is to see if price can reject or retest this 50% pure Z level one more time, and that's what it did, right? So on this 30-minute time frame, we can see we have a little more detail here, and the entry technique was fairly simple, right? Price rejected this 50% yet again here on this 30-minute time frame. The entry was right after this candlestick, I believe, or somewhere after this second candlestick. It was somewhere along this level because spread put us around here. The stop loss was right under the low. We wanted a little more of an aggressive stop so that we can actually have a scalp for people. So this would have been a nice scalp here for about a 1 to 1.5 risk to reward ratio, right? Which, as you could see, was hit shortly after. And again, this is why you need to be able to manage your risk as appropriately as possible, right? Because we took a loss somewhere going long here, right? I'm not going to really go over that loss. It was just more or less a bad entry signal, right? And then just this one move right here alone made back that loss, right? So imagine if you would have been risking 5%, you would have been down already 5%, and you would be very hesitant to take another entry on the same move because you already lost a good chunk of capital, right? Typically, I lose 5% within 2 or 3 trades, not on a single trade, right? That's if I'm risking 2% per position, right? So anyways, price just pulled back, tested this level right here again, tested our entry, and then continued to go up. So that would have been a great or that was a great entry there. It was definitely a high risk entry, so we only risked 1% on this position. Now let's look at another setup here, right? So again, we have a break and retest setup, right? And the way we actually structured our take profits is based off of risk to reward ratio. So this was TP1, this was TP2, TP3 is a 3 times risk reward. As you can see, currently everyone that's registered in the signal room is up around 180 pips from entry, as you could see here, right? Where is it? Right here, 180 pips from entry, and currently it is still running. Stop losses have been moved to break even for those of you that want to hold if you're currently enrolled in the signal room. Anyways, TP3 does align up with this level here quite nicely. You know, we may see some form of a rejection, and then hopefully we will see price continue to actually go up and form new highs because of the daily time frame, right? I'm expecting price to go up and form new highs because of this daily time frame. Notice the bull move, right? Price has already pulled back more than 50% of this bearish move, right? So boom, price is currently pulled back more than the 50% on this bearish candlestick move. So what can we expect with this next daily time frame? It's pretty simple, right? The next time when this candlestick formation happens, typically what we're gonna see, right, is price pull back, form the new day's low, then form the new day's high, and hopefully we will see higher highs. Now our overall projection for this trade is up here, which will give us about 5 times our risk for our clients. So even if we lost the last 2 trades, which we didn't, right, they would have made back their money plus way more on this one trade alone, right? So imagine the bot took an L here, we ended up getting in and calling a signal out here, right? So they're down 1% here, but they're currently up 3%. So overall net, I guess you want to say overall profit so far, they'd be up 2% from the signals so far if they decide to close out right now, or they could look to gain a potential 5% if they hold to this TP all the way up here. But that's basically the whole premises of the trade. Pretty simple breakdown, nothing too complicated. So hopefully you guys did enjoy this video. Oh, let me actually go over this second entry here. So let's say you're a day trader, right? And you're looking at the market, right? You see that price broke above this kind of mark off structure like this. You can see that price broke above this level of resistance. Again, if you're enrolled in my online program, which I don't care if you are, you should already know what setup this is. Again, it's one of my favorite setups, being a break and retest level or a break and retest setup. Why? Because at one point in time, buyers had, or sellers, there was selling pressure at this level. Buyers broke through that level, and we want to see if buyers will hold this previous level of resistance as a level of support, which the first indication they are is this big red candle, because notice one, the wick to the downside. Along with that, price closed above support or above resistance, previous resistance, now newfound support here. What can you do? If your main directional time frame is based off of this 30-minute time frame, then typically I like to go down to the 15-minute just to see a little more information. Now, an entry technique I like to use is when price closes above the high of the previous candlestick. That's a pretty decent entry technique there. Now, you could have done this on the 5-minute or the 15-minute, solely up to you. Right, and again, notice the 5-minute time frame is still respecting this structure here. So here we have higher high, higher low, higher high, higher low, higher high, higher low, right? So we would definitely want to place our stops under this low here, right? So an entry I would have personally gone with, typically if I'm on the 30-minute, I'm going to use the 5-minute, but that's because I want to be as precise as possible. So my entry would have been here. The stop loss would have been under this low right here. And the way I would have maintained this trade, and obviously the targets are just going to be based off the 30-minute time frame as well. And the reason we place our stops here is because if price breaks this low, forms a lower low, then I'm wrong in the direction and want to get out of the trade and want to cut my loss as soon as possible. And the target would have been this level of resistance. That would have made the most sense. You know, I really want to be targeting the actual high up here, mainly because we took an earlier entry up here, which we could see price pull back to this level yet again. But that's why we have an earlier entry for the 4-hour swing setup, right? But anyways, that would have been the setup right there and there. And you would have seen take profit would have just gotten hit roughly half an hour ago. I want to say 8 minutes ago, actually, right? So it's as simple as that. Now you can ask yourself, okay, Raul, well, how can I wait for the next trade opportunity? Pretty simple, right? Let's say price breaks resistance. We're going to wait for price to come back down into this zone, and we're going to look to go long there. Or if you're a counter trend trade trader, you see prices at resistance, you could look to go short and probably take off profit here. Even though me personally, I don't believe in counter trend trading. You know, I say, you know, you go with the overall flow. Why try and trade against the big banks and market makers? But anyways, I feel like this video is getting a little bit too long. So hopefully you did enjoy this breakdown here, and I will get back to everybody when in the Discord pretty soon. I just finished moving in, so I still got some stuff to set up. But anyways, hopefully everyone does have a great rest of their trading day and a great rest of their trading week.